Good afternoon. It's 4 o'clock. I'll call this meeting of the Executive Committee to order. Housekeeping, we are recorded and live, so please silence your cell phones and speak with knowledge of where the microphones are. We are all here. This agenda was posted in the office of the county clerk on the 12th day of August, 2026. Notice was sent to the Washington Daily News, the Express News, WIBD, WMBZ Radio, WTKM Radio, My Community Now, the Hartford Times Press, the Kewaskum Statesman, and the Milwaukee Journal Sentinel. We will rise for a moment of silent prayer and the Pledge of Allegiance.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
The minutes of the July 15th, 2026 meeting were in the packet. Does anyone have any corrections or additions? There being none, we'll leave them as posted. We initially were going to go first to the discussion on the ATC line for the data center and some court action on that, but we don't have the attorney on. He's coming on Zoom, so we'll go to that once he is connected. So lacking that, we'll go to the next item, which is a presentation by PTMA. And please remind us what PTMA stands for, sir.
They can tell you that. No, I'm just here to introduce Brian Hexdorf and Josh Barbian. They'll be here from PTMA to do that, but they'll go over those acronyms. You know, government, we like to work in those. So
You do.
here's Brian.
Thank you, County Treasurer Scott Hankey.
Hello, am I on or do I need to go? Good. Okay. Red is good. Very intuitive. All right. I'm the slow one here, but good seeing you all. And I guess I will start with answering your question. I will say you will never see this written anywhere out because it's a very long name, but you're not allowed to have a business with an acronym that doesn't mean anything. So it is Public Treasury Management and Advisory. So I suppose that is a nice summary of what we do. We work with the public sector. We manage money. We work with the treasurer's office. We're providing advice. These are the things that we do every day. So I see we're not projecting the slides here. So we're handing them out. Perfect. So if we go ahead to slide 2, kind of speaking of our name here and the things that we do, we believe really strongly that we have a very good investment process and one that adds value for our clients every day. It starts with research and understanding every security that we own, making sure it is of the high quality and generating the type of income that is safe and prudent for public investments. I could go all the way around that circle, but I'll just jump to the end. Ultimately, we measure that result so that we can see how are we doing compared to the market, and answering really that question is, do we add value as a manager? And we're going to be able to show you very clearly at the end here that we definitely are. So if we go a couple of slides ahead, I could drone on and on about what's happening in the economy and the markets. I'm going to keep this to 2 slides and kind of hit the 2 key themes here. The first is, what is the Fed doing? And the Federal Reserve, one of their jobs, has a very direct impact on especially short-term interest rates. And the market believes that the Fed, before the end of the year, is going to raise interest rates. So why is that? It's really twofold. First, we've seen inflation trending above the Fed's target of 2% now for about the better part of 5 years. So the new chair came in and said, pretty definitively at his first meetings, we're going to deliver price stability. Ever since then, the market has been believing the Fed will, at some point here this year, raise rates. The other piece of the Fed's dual mandate is the employment picture. Last year was definitely a weak year for employment. You may have heard the term no hire, no fire. Things were just kind of steady and not great. This year, we've definitely seen a pickup. I wouldn't say it's robust. We've seen some revisions downward, actually, to even some stronger numbers that we saw during the spring months. But overall, a better employment picture. And the economy in itself is doing pretty well also. A lot of that has to do with business investment, but we also have a consumer that's employed. And I always say an employed US consumer is a spending US consumer. So you put all of that together, and the Fed probably, I will say, needs to raise rates to help get the inflation back down to lower levels. So if we flip the bottom part of that slide, or actually I have to flip the page, our outlook, once again, it does look more likely that the Fed raises rates. We don't think this is a multiple hike situation. The Fed typically moves at quarter point increments. We don't think they're gonna have to do this 5, 6, 7 times. It's 1, 2, maybe 3 rate hikes. I think an important piece of our outlook is corporate fundamentals remain quite strong. That should continue to be supportive of the bond market in general. And with the Fed possibly raising rates here, that's good for very short-term interest rates. Josh will be talking in just one moment here about WISC and the overnight investments that are provided in that. So higher short-term rates are always good market outlook there as well. So I'm going to turn it over to Josh for a couple big picture looks at the portfolio, and then I'll drill in on one specific piece here in a moment.
Thanks, Brian. And as he hinted here, the county has really two portfolios. So we've kind of got our shorter term reserve portfolio and the longer term portfolio. PTMA is the administrator of the Wisconsin Investment Series Cooperative. That's an LGIP only for public entities in that. So that's essentially kind of a money market fund, right? So that's where a lot of the liquid cash goes. I'd say our investment goal for that is to hit, the liabilities of the county. So we're helping the treasurer's office when you guys need excess funds, right? Just for operations. That's the primary goal for us, is to have investments available and ready to kind of support operations for that fund. So you can see kind of the big picture there. We had about, I think these are numbers as of July 31st. So 57 million in whole, kind of in that short-term, operating shorter-term fund investment. And then almost about 14 million in that longer term reserve account as well. So if we go to that next slide there where it has the short-term portfolio, you can see on here, again, this is kind of the breakdown in those short-term holdings. Primarily, again, we're kind of that short-term daily liquid cash on that account. So that's kind of with our money market fund. And then we also have fixed rate investment offerings too. So these are safe, state statute allowable, investment policy compliant investments that we're doing for that. So if we know we have, $10 million of county funds that are liquid and available, and we talk with the treasurer's office and, hey, we're not going to need 5 million for 6 months, 9 months, 12 months, something like that. We'll go through and we'll kind of competitively bid that out for the county. And when that comes back, we're kind of looking at, US government securities, certificates of deposit, kind of things like that. State statute allowable, safe, secure on there. And that portfolio as a whole, you can kind of see the breakdown on there. We're primarily looking at kind of like treasury securities, CDs, and then we have kind of another LGIP product that has like a fixed term on it called that term series. And that portfolio for those fixed rates is at about a 4.19% as of 7/31. So a nice return on that short-term, portfolio for those fixed rates. as you can see with that weighted average maturity, we're inside of a year. So this is kind of more funding, kind of short term, right? Not the real long-term reserves. Brian will kind of talk about that portfolio. And then just with that competitive bidding process, again, what we're just trying to do is we're honestly matching up investments with like liabilities and need dates of the county, right? We're not going out super long. It's very safe, secure investments. Just really trying to align our investments with those liabilities for the county. We're going to be talking very soon about, we also have this cash flow application that we do, just an online based cash flow program. Also kind of helps us out with like investment planning. So we'll be meeting with the county very soon on that too. Again, just to have an online version right on the online account where we can kind of see the cash, again, liabilities, investments, and we'll be kind of doing the investment planning off of that portal as well. Any questions on that short term? Yep.
How often do you re-examine and rebalance, or you said if you have something longer term,
Yep.
how often do you look at that and reassess?
I'd say I probably talk to Scott in the treasurer's office probably a couple times a month with that. A lot of times when we'll have, a whole investment ladder, maybe right of shorter term investments on there at those maturity dates, we probably have, I'd say on average 1 or 2 maturities a month. So each time we have a maturity, we're having a conversation with the county. Do we need access to those funds? Because sometimes we'll have a, $2 million maturity. It'll go to fund a, capital project or something like that. So I would say we're in a very regular, I'd say probably 1 to 2 months on average with that. Anytime we have an investment maturity, we do not just reinvest on our own. That's just, we have a maturity, we'll bid that out again. If the treasurer's office says, hey, we don't need these funds immediately, we'll bid that out and then review those investment options with the county. And then, whatever's paying the best rate or the most attractive investment, we're kind of moving forward with that. So I'd say a couple times a month at least.
Thank you.
Yep.
Any other questions?
All right, I'll turn it back to Brian for the longer term.
Just a couple more slides here. So Josh covered the largest piece of the portfolio. I'm going to just a couple of comments on that $14 million piece. It is longer term. It's a 1 to 5 year investment. So these are reserves that, in close communication with both finance and treasurer's office, we feel confident that the county is not going to need. These are highly liquid securities. So if something were to change, if there were to be a surprise, we could certainly make those funds available. The things I want to highlight just right off, and this applies to everything Josh spoke to as well. First and foremost, everything that we buy is compliant with state statute. Equally important, it complies with the county's investment policy. And then third, I mentioned earlier, research is always our starting point. So we're going to make sure that we thoroughly understand each security that we're buying. So we put all of this together. What do we put? Our focus is on building high quality, well-diversified portfolios. Because as we're investing out a little bit longer here, some investments as long as 5 years, but it truly is a laddered portfolio. We want to make sure we have a good understanding and we're continuing to monitor those securities all through. So, roughly that portfolio is about 1/3 treasuries, 1/3 corporate securities, and then kind of a mix of agency and municipal securities in addition to that. Putting the portfolio together, it's about a little less than a 4.5% yield. So definitely a nice yield in this portfolio. Average credit quality of AA. And in the bottom right portion of slide 9, you can see the chart labeled portfolio characteristics. You can see that yield. We're always comparing ourselves to a benchmark. We've got a nice 10 basis point yield advantage over just buying treasuries and agencies. The bottom part of that slide 10, just to give you a picture, we talk about 1 to 5 year investment plan. I think everybody's mind mentally immediately goes to 5 years, but what we're trying to show here, there's a lot of investments maturing in, kind of that 1 to 3 year range. That's the meat of the portfolio. So it truly is a laddered type of a strategy. And then finally, my last slide here, slide 11. Taking a look at long-term reserves, we're really proud to have been now investing for the county for over 10 years. And actually, Josh, on the short-term side, has been working even much longer than that with the county. But we've got a nice track record. Since interest rates moved up back in kind of 2022 when we were dealing with the inflation problem, you can see that trailing 3-year return about 4.5% on an annualized basis. So over 3 years, you know, you multiply that out, that's almost 15% type total return. So definitely generating some nice income. You can also see the blue bars, that's before and after fees, all higher than the green bar. And we've been beating that pretty consistently by 40 or 50 basis points. So I mentioned currently yields maybe only 10 basis points or so over the benchmark, but through time between the yield advantage that can usually range around 30 basis points, but then just also the good hard work that we're doing every day in the management of the portfolio, we're able to generate those yields of 40 or 50 basis points above our benchmark. So this is something that we look at every single day. The team is committed to monitoring this very closely. And, you know, I think we've got some really good performance to show for it. And that does wrap up our remarks, but certainly happy to answer any additional questions.
Does anyone on the committee have any questions or comments?
Very well.
There being none, thank you for your presentation.
All right, thank you.
Okay, at this time, I've been notified that Attorney Curtis is online, so we will jump to item G, which is litigation update on the power lines for the data center under construction. So, Attorney Stern, you have a comment?
No, Your Honor.
No, Your Honor. Okay, Attorney Curtis, you may proceed.
Can you guys hear me?
Yep.
Yes.
Perfect. Good afternoon, everybody. Thank you for allowing me to give an update. Yeah, so Brad just wanted me to kind of update everybody on the PSC action involving the ATC transmission line. In case you haven't heard, a very interesting development since we last spoke. So I think it was Thursday, August 6th. The PSC had a hearing to consider a motion that had been filed. It was a motion to revoke the determination of completeness of ATC's application. So just, I guess, taking a step back, last year, ATC submitted its application for the transmission route that, as we all know, would have cut across Sheboygan, Ozaki, and Washington counties. The county decided to intervene in that matter. Again, it's technically an application, but essentially it's like an administrative hearing. So Washington County was admitted as an intervener in addition to several towns, many parties, but as far as municipalities go, several towns, and then the county. And then really months and months of back and forth. There was discovery, which was, you know, just basically a fancy way to request documents, which I worked with Brad on that. Brad did a great job really collecting that information, because sometimes those requests for documents, and then they're called interrogatories, or basically questions, they can be pretty technical in nature. So, and, you know, many times Brad and I, as the attorneys, right, we're kind of doing filings and making sure everything's timely submitted, but obviously we don't have at our fingertips a lot of that information. So Brad did a great job kind of organizing the key players in the county to actually get that information, and then always preparing, if this actually had gone to a hearing, making sure that you know, any testimony that was submitted on behalf of the county, you know, those individuals, because ultimately they're sworn statements, that they are able to testify accurately as to what the impact of that Southern Preferred Route, which was how that route was phrased in the application, how that would actually impact the county. And so we went through discovery. Again, Brad was very helpful. I think we got some really good information over to those who were requesting the information. And then kind of the final key piece was we actually submitted testimony So unlike maybe like a trial where you would actually have live witnesses, the PSC definitely prefers written testimony. It obviously just makes things cleaner and easier, because there were probably a dozen interveners, so multiple parties, in addition to ATC. So to have a hearing with that many witnesses, even if each party or intervener only put up a few witnesses, it would have been days and days of hearing. So it was written testimony. And again, Brad and his team did a good job of putting that together. And I obviously helped put that together and then filed it on behalf of the county. And then kind of the last key piece was REI, which was one of the kind of property owner interveners, so a group of property owners. They actually filed this motion. So it was actually a motion to revoke this determination of completeness. The PSC had already determined that ATC's application was complete. And really, typically what happens is in these hearings is once an application is determined to be complete, there may be requests for additional information, but I think it's fair to say typically that application, there may be a lot of hoops to jump through, but typically the applicant, their application will be approved. So when this motion came through, it was definitely an interesting development. I personally have never seen one granted, but we all kind of thought that there was a possibility. And so when that motion was heard on August 6th, it was kind of some really surprising news that the PSC unanimously granted the motion to revoke, essentially to eliminate, to strike or pull back their approval of the application. That resulted in any public hearing being suspended. There was supposed to be, I think it was this week, there had been a public hearing in, I believe it was going to be Ozaukee County in Saukville. That was suspended. And then a final order came out from the administrative law judge, essentially suspending any further proceedings in this matter. So essentially the application is dead. I'm not sure what is going to happen next as far as an appeal goes. My understanding is ATC would have the ability to appeal this decision from PSC. Last I checked, they have not done that yet. The alternative, I guess there's two alternatives. One is, three. One would be an appeal. Again, I'm not sure what's going to happen on that. So that would be an appeal to circuit court. The second option is to refile an application, essentially starting the whole process anew. And the third, and this is very much insider baseball that I'm just not privy to, they may choose to wait and then file an application using a different proposed route. So there's probably some similarity between the second and the third option. I find it very hard to believe that they would go with the second option, again, being just to simply refile the application. I think the interveners in this case, including Washington County, pointed out a lot of deficiencies in the application that ATC missed as far as crossing over very sensitive environmental corridors. So I will work with Trenton as well. Both Washington County and Trenton, I think, very effectively pointed out that at least in the Washington County kind of corridor of this route, there was numerous DNR identified wetlands and other sensitive kind of viewing corridors that would have been impacted by this route. And I guess I'll conclude and then happy to answer any questions. I spoke pretty consistently with REA's attorney. I think Brad would agree that's pretty common in litigation where parties that you're aligned with, you end up communicating with on a consistent basis. I think that's a good thing, right? We never stop representing our respective clients, but it's always good to essentially get intel, right? And so the REI attorney was very helpful. And I would just note for your benefit that, again, this is kind of a third party. He thought, and he's a very respected attorney out of Madison that exclusively works with kind of takings and land use issues, typically on the side of property owners. And so, he may have been on the opposite side of something for what involving Washington County, but in this matter, he was extremely helpful and actually pointed out that he thought the involvement of Washington County and the towns was extremely helpful in this case, because obviously property owners are going to have very much a personal interest in trying to prevent this because they don't want something like this across their property, which that's understandable. But I think in his opinion, and I just wanted to pass this on, he thought it was extremely helpful to have Washington County and the towns involved because, frankly, I think we added kind of an objective view on this, right? I think your resolution was clear. You really weren't taking a position on the data centers specifically. It was just very narrowly focused on the impact of the Southern Preferred Route on either county-owned land or property owners in the county. And he said, and I, to be clear, I did not talk to him until later in the proceeding. We had already filed the motion to intervene. We had produced this discovery, and the statement, the testimony from the county was already drafted. So it's not like he gave us any pointers, but he, in reviewing the material, had very good things to say about the county and how you all approach this from, again, an objective standpoint, not really getting into the politics of this, but just focusing very specifically on how this would impact county property or property owners, and just encouraging ATC to look closely at what the impact would be. So I just want to pass that on. And it all started with the resolution that the county board passed last, I forget if it was fall or winter. Your resolution was very well done, and I think really set the table for the county to take a very strong position in this matter. So I'll stop there and answer any questions that you may have.
Supervisor Kelly?
Thank you, Mr. Chairman. So when I saw this, I mean, it was kind of a bit of a shock, but kudos to everybody involved. I believe it was a direct result of the actions of the county and the attorneys and stuff like that. So I think that it really seemed like it wasn't a good deal for us, let's just put it that way. Did the PSC, or do they usually make any type of statement in regards? Because this is an action that I don't know that they've ever really done before. Did they make any kind of statement in regard to AT&T, what their reasoning behind revoking it was, or anything like that?
Yeah, great question. I guess a couple of things. First, obviously, just by granting the motion, that was a very clear statement, because I think it's fair to say that you're right. These are rarely a motion to revoke an already approved application. I guess I'm hedging a little and saying rarely. The REA claims that in their experience, and again, those attorneys are involved in PSC matters. They've been involved for years. They claim they had never seen a motion like this granted. And so I always hesitate. I mean, in the history of the PSC, has one ever been granted? I don't know. It's possible, but I think it's certainly fair to say these are rarely granted. Again, once the PSC makes a determination that an application is complete, there typically will be a lot of work after that as far as the PSC. Interveners may identify missing information in the application. I won't bore you with all the details, but Brad, I know was kept in the loop on this. I mean, every day, I'm not exaggerating. So the docket is basically just like the formal, every case has a docket, and that's just where every document that's filed in the matter gets logged, and anybody that's involved in the matter can click on it and see it. I'm not exaggerating. There were days when there were dozens, if not 100 or more comments or filings from the respective parties that were filed with the PSC. And oftentimes what would happen is the PSC would then essentially turn to ATC and request more information to identify or to respond to deficiencies that were identified in the application. And so my second point was going to be, I think in addition to simply granting the motion, which was almost unheard of, throughout this process, every week, month by month, it was becoming very clear to, I think, many of us that the PSC was definitely identifying deficiencies. It was probably weekly that the ALJ, the administrative law judge, who was, because to be clear, the PSC, right, they weren't handling the day-to-day issues. That was the responsibility of the ALJ. I mean, almost weekly, the ALJ was requesting extremely detailed information from ATC to respond to alleged deficiencies in the application, which I think to many of us started to at least give some sign that it was possible that the PSC was going to grant this, because it was extensive additional requests to the point where the ALJ about midway through the proceeding did issue an order. So maybe, I guess, in answer to your question, at one point there was a formal order from the ALJ that kind of outlined, this was prior to the motion, really outlined how, I'm paraphrasing, but utterly confusing the application was becoming, almost to the point where, and I think he noted in his order, that it was almost impossible for any intervener to really even be able to keep track of all the different changes in the application. And so I guess the simplest way to describe it is, I think the ALJ was viewing it as, you had the original application that was filed, and based on all the requests for additional information, I mean, the application was not even remotely close to what had originally been filed. And I think that was really impactful. I mean, I think ultimately that's why the PSC granted the motion, is that this application was essentially no longer the same application. So you kind of had to read between the tea leaves, but I think it was pretty clear, looking at the PSC decision to grant the motion, and then all the numerous communications and orders from the ALJ, that they obviously saw merit in the need to essentially rescind the application.
And just in my own personal way, and it's just my thoughts. It's for the data center. For the people at home thinking this is the end of the data center, it is absolutely not. And I personally believe that your third point of filing a different proposed route would probably be the most likely solution for the data center, and would probably be most agreeable to the PSC. But again, that's just my opinion on, or thought on this. I do believe that it was probably turned down specifically because of Washington County and Ozaukee County and the sensitive areas that it went through. Clearly we had the pictures that showed the pothole water and the woods and natural areas. I mean, it was just straight up, you'd be an idiot to go and put a power line through that area and clear cut out the trees that you would need to get both sides of the line to give the easement. So very bad, but thank you.
Can I ask, I believe the PSC is made up of 3 commissioners.
Correct.
Do we know if that decision was unanimous?
It was.
Thank you. Any other questions or comments?
Kind of, but I can wait.
So,
Wait to see what happens.
so at this point, it's a wait and see for us?
Correct. If there's any sort of appeal, we would get notified of that. But I mean, as we sit here right now, right, this application is dead. The hearings, the public hearing in, I believe it was Ozaukee County, and then the actual hearing on the application have been canceled. So there's no upcoming events. The application is essentially dead. So it's either an appeal or some sort of refiled application. And I'll certainly stay in touch with Brad if I hear anything. Like I said, the attorney from REI has been very helpful. He's reached out and offered up information as far as new developments. So if we hear anything as far as next steps go, I will definitely work with Brad on that, and then he can kind of inform Josh and others, and But yeah, right now I think everybody's just kind of waiting to see, because I just drove by it this weekend, right? The data center is there and it's as far as I can tell, it's being built. But obviously it's going to need power. So at some point, ATC will presumably have to make a decision on what route they use. I mean, I'm probably getting a little outside my area of expertise, but my understanding is right that there was a cost concern from ATC as far as using existing routes. But I can't imagine the last year has been cheap as far as essentially a litigation effort goes. So maybe they rethink that and decide to use existing routes, but I'm just guessing at that point.
I actually do have a question now.
Supervisor Shadron.
Thank you. So if ATC refiles and they go back to the same route before, does our motion that we already filed or all the data that we already filed, does that stay in or do we have to refile at that time?
Great question. So my understanding, and I guess I'll hedge a little here because I guess it's possible that the PSC maybe uses the same docket number and use it as like an amended application. But the way I've kind of interpreted it, the application is dead. So my assumption is that there would be a new application that would be filed with a new docket number, which would then, and I think this is, I'm just kind of speaking off the cuff here. I think that's how it would have to go because there's all sorts of statutory deadlines associated with Wisconsin Chapter 227, which is kind of like the guiding chapter on a hearing like this. There's going to be all sorts of deadlines and opportunities for the public to submit comment. There's going to be opportunities like Washington County did to intervene, and those are all pretty strictly enforced as far as deadlines go. So my assumption would be that there would be a new application. I'm guessing then at that point, if the county chose to intervene again, it would have to refile. But I guess I would just caution that would be a situation where obviously Brad and I would probably discuss it and then maybe go to you with an update to see what the preference of the committee was, because we would have to see what that route is. It's possible that, if they're proposing to use existing routes, maybe the county doesn't have an objection to that. If it's a different route and the county would still have an objection, then my assumption would be is that we would have to refile and go through the process again. I mean, like anything, the good and kind of the silver lining there would be a lot of the work as far as procedurally putting together the motion, putting together the testimony. We would essentially have a really good starting point. So a lot of the time we've put in so far, we would probably be able to reuse a lot of that, with the caveat that obviously if the route significantly changed, in other words, was going, I don't know, maybe they go through the northern part of the county, right, which would be completely different parcels, and it might directly impact county-owned property. Brad and I would just have to assess that to see how different it was. But I would say in any litigation matter, if you have to do it a second time, the fact that we've already gone through this, I don't know, maybe it's half of the work product we could reuse.
I'm good with that. Thank you.
Any other questions? Attorney Curtis, thank you for your help and work on this, and thank you for your time today. Have a good evening.
Thank you all.
Our next item is the Innovation Fund presentation by Aaron Dahl.
Good evening. Thank you, Mr. Chairman. So just wanted to give you a little bit of an update on the innovation grant, in terms of sort of how it played out for us, and then what we're looking forward to in subsequent application periods. So a little bit of history and structure notes, I guess. The program was created with 2023 Wisconsin Act 12. That was the shared revenue bill, the big omnibus shared revenue sales tax kind of bill that they did. The program itself is managed by the Department of Revenue. The innovation grant, so it provides up to, so there's $300 million of funding that was allocated statewide. Local units of government are eligible to receive up to $10 million annually through the program. Essentially, the amount is equivalent to 25% of the total costs of transferring services, right? So think of two entities to make it simple. One transfers the service over to another one. 25% of those costs from that prior year are eligible to be reimbursed through the grant. That can come through over the course of 5 years, and I'll articulate how that works for the Washington County in a moment. But generally speaking, you've got to establish a contract, as you can imagine, and different sorts of things that go into what's called an innovation plan. The quirk in that is that the contracts themselves must have been signed on or after November 13th, 2024. I think we've talked about this before in the past. That corresponds to the date that the DOR wrote the rules for the program. This date caused some issues for the county in terms of eligibility. So the law was enacted in June of 2023. If you think back to that time, we were already in the process of creating all of the shared services initiatives that we know today. At that time, we talked about this eligibility requirement. You know, I think our general consensus was we shouldn't wait. We should, you know, strike while the iron's hot on these shared services initiatives, and use that momentum. And really, we were thinking, how long could this actually take for them to write these rules, right? I guess later we'd find out that the magical date wouldn't be established for another 17 months after that. So 17 months after the law was enacted, the rules were written. So, you know, not necessarily the DOR's fault, but of course it represents how things can get delayed when you're talking multiple layers of bureaucracy. So finally, September 2025, now more than 2 years after the law was enacted, the application period opened up. So the county went through and we ran into a couple of challenges. So one I already alluded to is that most of our contracts were established prior to November 2024. So because of this, essentially only one of our 9 shared IT services agreements were eligible, and 2 of our 10 shared GIS agreements were eligible. Likewise, and really to an even greater extent and financial magnitude, neither of our consolidated dispatch initiatives had qualified for the innovation grant as well. Another challenge we had was, and this is a sort of a technical thing, but essentially, you know, our partners had to have had costs in the prior year for us to be eligible to get some grant dollars. So when we're talking things like municipal planning that are project-based, if there were no projects the prior year, there's no cost to claim it against, right? So we ran into some challenges there. Likewise, if, you know, things like even extended voting hours, for example, that was a new initiative. So, you know, there were no costs in the prior year to claim against. And so, you know, there were a number of quirks in the program, and it's really just the way the law was written. But we had great intentions of recouping as much as we could through a lot of this, but there were a couple of issues. So in the end, just to kind of report, the state received 56 applications statewide and awarded 35 of them. So you know, there were plenty of them that were denied as well. They awarded a total of $72 million. So 72 of the 300 million is what was awarded. So there's plenty of money left over. Washington County was awarded 3 of the 4 applications we submitted. So for a total of 164,000, and that comes over 5 years. So 32,750 for 5 years. We've already received the first check on that. The one application, and I referenced this earlier, that was deemed ineligible. That was our consolidated dispatch with Germantown. So we had implemented 1 of our 3 phases, right? So we took on 1 shift of the 3 before the magical date, and the other 2 afterwards. And so I tried to make, I tried to make an argument that we should qualify because we weren't fully doing the thing yet. That didn't really fly. I even tried to just argue that we should get funding for 2 of the 3 phases. That didn't fly either. It was all or nothing for them. So Hartford wasn't eligible at all just because of the timing. It's, I mean, laws are written the way they are, but it's a little bit frustrating because the program was designed to incentivize exactly this type of thing, right? And it had a strong emphasis on public safety as well. And some of our applications I thought made sense, but we didn't qualify because of a technicality. Yet places like South Milwaukee gets 300,000 a year for privatizing garbage collection. Something they were probably going to do anyway. But it's just the way it goes, I guess. But looking forward, though, the DOR has $227 million yet to use on this program. So they've indicated they're going to open up another round of applications that will come due in March of 2027. The window opens in the fall of this year. So we'll be keeping an eye on that. We've got a couple of things in mind already. One example of that is possible shared IT between the county and the village of Germantown, for example. You'll be hearing about that soon. Some of you heard about it already. So that's one example of the types of things we would apply for, we intend to apply for in the coming period. So just wanted to give you a little bit of an update on the program and how we're looking at it and how we're tracking it. I'm happy to answer any questions if you've got them, but the DOR's website also, I should add, has way more information than I could ever provide on what the program is, how it works. It's got a database of all of the applications, so you can view all 56 applications if you're interested in seeing what sorts of innovations are out there. It's actually a pretty valuable database for that, just to kind of see what other people are doing out there in the world of shared services.
Sounds like some great nighttime reading.
Yes, it is.
Supervisor Kelly.
Thank you, Mr. Chairman.
Aaron, so when this date came along,
Mhm.
this cutoff date, where does the responsibility lie with that? Is that with the lawmakers that made the law, or is that with the bureaucracy that interprets and basically puts it in place?
Sure. It's a little bit of both. My understanding is that the law was enacted and it says that, essentially these innovation plans need to be signed after the DOR has finalized their rules, right? So state agencies write rules and then it goes through an approval process. So one could argue that one thing I do know about this is that the program was created and then the DOR basically, it seemed like was asking for staff to run the thing because they didn't have enough staff. They didn't have any staff to manage the program. And so my understanding is it took a little while for the legislature to identify some funding and for them to hire people to write the rules, to build the program. I don't have an exact timeline on that, but I'm sure that added to it. So
I think the big problem with our state lawmakers And something we'll probably have to address with them is, we come up with these things and we act in good faith to do these things, the things that they wanted us to do. And then they turn around and mess it all up. It's really a shame because I think like we're trying to do what they're asking us to do. And yet our people are going to be shorted on the dollars. And I just don't think that that's right. And I think the state lawmakers, Assembly, Senate, they need to, make sure that we're made whole on this. And that's not really a statement for you or this committee, but for anybody who might be listening out there. That it's not right that the county should have to bear the brunt of their incompetence. Thank you.
Any other comment? I'll make one. It's too bad that what happened, but in the long run, we did the right things. We innovated and we saved some of our municipalities money. So, I guess we have to feel good about that. We know doing good doesn't have any end, so.
I mean, yes, I agree. In terms of the timing of these things and when innovation happens, it's often, it has to happen immediately, right? Somebody retires or there's a budget issue or there's something, right, that is driving the urgency on this, and you just gotta go. So
Thank you for your presentation.
thank you.
Next up is item C, consideration of Washington County next generation housing 3.0 funding structure recommendation. This will be presented by Deb Silsky.
Good afternoon. So I am here to follow up on our conversation that we had back in June on the Next Gen Housing 3.0 funding structure. When I was here back in June, I presented in detail the updated price point analysis, which I'm not going to cover today, but I can certainly refer back if needed. I brought it along. And there was action taken by this committee as a 20-unit pilot. If you recall, we would replace the current $20,000 0% loan and the $6,000 permit fee, replace that with a $25,000 direct incentive to builders and developers. And then that incentive amount would be placed in a 10-year deed restriction, and the landowner, the new home buyer, would earn 10% per year for 10 years. So we have, in working with A&N in Hartford, we have 2 homes that they've started that are under those parameters. And then I was also requested to go back and take a look at possible long-term solutions for our Next Gen Housing Fund, which I did. I've had numerous discussions with our outside counsel, representative from FIPCO, lenders, local lenders, as well as a builder, really to determine the long-term impact of the different scenarios. And we really had looked at and talked about 4 different scenarios. First one was the pilot that I just described. The second one is really our staff recommended option. Again, eliminating the $20,000 loan, eliminating the $6,000 permit fee incentive, replacing it with a $25,000 deed restriction. So those funds would be provided to the builder and developer. It would not be put in a lien. Instead, those funds would be put into a deed restriction where the first home buyer would earn that. But instead of earning it 10% every year for 10 years, we're proposing that the home buyer does not earn anything the first 5 years. And then in years 6 through 10, they earn 20%. There are other two options that we had talked about, the full payback in 10 years or the full payback when they sell the home. In the discussions that I had with the lenders and FIPCO, they did not, and the legal counsel, they did not recommend that. Doing that changes it from a owner occupancy deed restriction to an amount that has to be paid back. And then lenders will look at it as a lien, a financial lien that has to be paid back. So underwriters will look at that at their ability to pay. So the new homeowner's ability to pay. So those two other options have put on the sideline. And the staff is really recommending that we go with the 25,000 for 10 years, no earnings the first 5 years, and then years 6 through 10, they would earn 20%. In the discussions that I had, we also thought about the additional risk that this has on the county. Because instead of the funds coming back to the county, it is just a direct incentive. And in discussing that with our legal counsel, we came up with the idea that instead of providing the funds up front to the builders and developers, that it would be a reimbursable incentive. So the builder developer would go through the process. They would work with their lending institutions to get financed. The county would go through the approval process to approve those funds. So the lender would know that these funds are set aside. But it isn't until the developer would go through, build those homes, they would sell the homes, and after closing, when the county is insured that those homes did sell for those next gen housing price points, then the county would reimburse the builder that $25,000. And I did talk to a couple lenders and one lender that actually did lend for construction to one of our developers for next gen housing, just to understand what the impact would be. And as long as the county is approving those funds up front, and the lender would know that those are guaranteed funds as long as they meet their conditions of building those homes and selling them, that there wouldn't be any impact. So that would eliminate really the risk to the county. So to sum up, the recommendation for Next Gen Housing 3.0 is that we maintain the existing price points. We eliminate the $20,000 0% loan, eliminate the $6,000 permit fee, and instead provide $25,000 as a direct incentive to builders and developers, but it's reimbursable. And they have to perform and build and sell those homes and then get reimbursed. And then that 25,000 is put into a deed restriction for 10 years, no earnings, first 1 through 5 years, 20% years 6 through 10. So that is the recommendation based on all the due diligence that we've done over the last couple of months. Do you have any questions?
Yeah, when we went through this last month and we discussed all this and there were suggestions made and we pretty much hammered out the decision that, your group actually came to the recommendation. And I appreciate all the homework you've done and all the back channel checking and so forth.
Absolutely.
I think it's a good thing. Supervisor Schwab.
Thank you, Mr. Chairman. Just a quick question. In June, I believe it was, we allocated 20 of those units. Have all of those been used?
No, they haven't. Only 2. There are
Okay.
2 lots at Partridge Hollow where we utilized that because the builder was eager to get started. And that was the mechanism that we used just so they could proceed and get those homes started.
In my mind, if we're gonna go with the new recommendation and that makes sense and it meets the approval of the committee, it would also make sense then to claw those other 18 unit backs and institute those with the new system.
Yes, I would really appreciate that from an administrative standpoint. Yes.
Any other questions, discussion? Supervisor Newman?
Yeah. I had lots of questions, but Mike helped me get some of the answers I was looking for. I really need your help on this.
Mhm.
Okay, I just struggle to wrap my head around handing this money over. And I know, Josh, you're gonna probably have some comments on this as well, but I'm asking for your help to
Mhm.
keep me on track that this is a good thing, because all I see is subsidized housing and I struggle with it. The 25,000 essentially is handing $25,000.
Mhm.
When you say earn, it's earned just by living in the house. That's earning.
Yes.
There's no other way around it except buy a house, live in it, and you get the money.
Mhm.
I just struggle with that, and I just want you to help me understand that this is a
Yep, and I think
Good.
those answers, I'll start first.
please.
I think those answers really lie in the discussion that we had in June when I went over the price point analysis. It's a simple fact. Next Gen Housing all started because the workforce in Washington County that we want to retain was not able to afford homes that were being built. There's the gap. And Next Gen Housing and making those price points to align with their income is allowing those individuals then to get homes, to start building wealth. And Next Gen Housing, it allows the builders to build those homes at the price point. Prior to the price point analysis that we did originally 2 years ago, we were hearing from developers that and builders that they can't build homes for 320,000. They were not making a profit at all. And we need the builders to make a profit, to want to do this, to want to participate in Next Gen Housing when they believe in Next Gen Housing. So we did the analysis, and yep, sure enough, skyrocketing prices for land and materials and labor. Yeah, and so this group decided back then to raise the price points, and that's how, and add one. So that's how we got to 340, 360, 420. So in the last year, I've been hearing again from our builders saying, we are not making anything on these homes. We need to reevaluate even working with the county anymore to build these homes. It has to be profitable. It has, for our builders, it has to make sense. And so we did the analysis again, and once again, we realized that the cost of land, labor, and materials have gone up again on it's 5.9% increase overall, which equates to $20,000 on a $340,000 home. Unfortunately, the workforce of Washington County, their incomes haven't changed much in the last couple of years at all. So if this committee decides to raise the price points again, there is a whole group of our workforce who will not be able to afford the homes that we even build, much less any market rate homes, which, by the way, are being built at like 400,000, 450,000, 600,000 all around Washington County. So if we do nothing, if this committee does nothing and we keep these price points, then most likely builders will no longer build Next Gen Housing, or it will be extremely difficult to get builders to build Next Gen Housing. And the workforce then will not be able to afford the market homes that are being built by others that are not Next Gen House. I don't know if I want to add to that.
Yeah, I love Deb's passion. But to answer your question directly, I think the discussion, the back and forth between the executive branch and the legislative branch that happened here at this committee made this proposal exponentially better. And the reason you shouldn't be concerned about what you're questioning, and you have every right to question it, and every constituent who's ever questioned it, I say the same thing. In this case, what you have done by making this modification is you made it the first 5 years alone they have to pay back. They sell that house in the first 5 years, Washington County now gets 100% of the money back.
That's different from what we've done historically.
Mhm.
Now you have a situation where they're going to pay us back through that deed restriction if they're to sell. The average home buyer lives in the home for 7 years. So chances are Washington County is going to get a chunk of money back. In the event they don't, they're staying here for more than 10. I think you can do the analysis on someone who lives here for 10 years and how much money they're putting back in our economy. But by virtue of the discussion that we had here, that the democratic process of executive and legislative, you've made it such that what you describe as, a free check, there's nothing free about it. They owe it back. Forget the earning it. They owe it back.
Okay, that's an interpretation, I guess, a debate.
No more or less than yours, sir.
I agree. I agree, and that's why I said it. I accept that explanation. Is it our responsibility as government to provide the housing? Is where
So here's my philosophy. Government doesn't get involved with things unless the private sector can't or won't. Private sector can't or won't, and they're telling us in spades, not just builders, but developers, realtors, bankers, title companies, they're all telling us the same thing. If we're going to deliver for the working class in particular, this is where we step in. We do it in commercial industry, we do it in industrial development, we do it in retail development. We don't do it for the common working person. You are here and you've set it up now where they owe it back.
So there was some language in there about land discounts, and I'm just curious on how that works through. So this incentive doesn't take place if there's a discount in land provided.
Right, so,
Is there anything earned back on that, is what I'm asking.
yes.
That's it.
So any discount that's provided by, let's say, a municipality, or even a builder, if they can show us discounts that they've provided, all of that would be put into that deed restriction.
So similar to what happened in Jackson. In Jackson, that land was developed and it was deed restriction. And the reason we did it is the inverse of, I think, what you're thinking. We did it so that somebody can't buy a house for 320 that in the free market is actually closer to maybe 360 and just flip it and pocket the money that the builder and the village and the developer helped to drive that cost down to try to get them into a home. In other words, we're trying to stop the equity theft.
Well, so that was one of my questions I had. I talked to Mike about was day one, someone buys one of these houses, they got the 25,000. They don't hit 5 years. They sell it after a year. Whatever equity they have, they
Mhm.
got to pay back the 25, but they can take the rest.
Right.
If it jumps 100,000, they're walking away
Mhm.
with 75, and we get our
Yeah.
25.
Yep, they would pay back whatever's in the deed restriction.
Yep.
So they're $25,000 plus any other discounts that are provided.
Just like my house, I bought it for 800,000 today, 5 years ago. Today it's worth about 1.5 million. I'd walk away with all of it. Remember when we started this, the average sale price of a home in Washington County was just under 300,000.
Mhm.
Today it's just over 400,000. That's in 5 years' time. So I don't think there's anything we can do to prevent that. But what we can do is the money we've put in, the money builders have put in, the money a developer has put in our municipality, we can prevent that equity theft, which is an important difference. I mean, you should know, like, this program is significantly more conservative than the recently approved legislation co-sponsored by many of our very same state representatives that is residential TID. When residential TID is used, there's no clawback. There's no opportunity to say, hey, hang on, you can't steal that equity. They could buy that house on day one for 300,000, sell it for 380, and boom, they've got the cash, which I have warned them about.
Like I said, I started the conversation with help me, I'm not saying no, I'm just, I really like because we came last time that it wasn't the 5-year 100%. It was a different proposal, if I remember right. So
Yep.
I like that at least 5 years we get 100%.
Yep.
And
Yeah.
then pay back from there. I do like that. I'll let someone else talk and maybe I'll. But thank you.
Supervisor Kelly.
Thank you, Mr. Chairman. Yeah, and I totally get it and I want to help you, Doug. So subsidized housing, I don't even like hearing that because I don't look at subsidized as always refers to people who are unemployed or underemployed or poor or whatever. This is not who these houses are geared at. They are geared at working class people, such as myself, that have a job earning roughly $25 an hour to be able to afford homes. And the reason why the county is involved, and I believe rightfully so, is the county does do workforce development. We do factory development. We're bringing in, say, PS Seasonings. We incentivize them to come into our community. But PS Seasonings can't come here if there's nobody here to work their jobs, especially when they can't get affordable housing. And so I think it's in more an investment because it invests in the tax base. So the people who are actually moving and living out here will pay taxes. The factories that they're working for, Brown Corporation, PS Seasoning, Milwaukee Tool, they're getting employees and also paying on our tax base. So I think, and that's part of the government's role, as well as the job creation and economic growth. Without those things, the government is, part of what I've seen in the last 10, 11 years I've been here is you need to have steady growth in government, manage that growth. If you don't, then you end up with confiscatory taxes. Because at some point the prices keep going up. Well, either you have growth to back those prices or you have higher taxes to pay for it. So I believe the government's role is definitely right in this program. And I, once again, I like to see the working man actually being in the forefront here, not the poor. I mean, we have programs for the poor, but there's no such thing as a program for the middle class. And I think that that's kind of what this is. But really, it's about economic incentive and tax incentive, that kind of thing. It's economic growth. So thank you, Mr. Chairman.
And I'll add that in this time of declining demographics, if we bring workers to these towns, you look at the Oaks and Jackson, there's a lot of kids living in those houses, and that helps the school districts too. Supervisor Schwab?
Thank you, Mr. Chairman. I would move that the executive committee approve the recommended funding structure option 2 found on page 3 of the packet. And also include and the program as discussed at the last meeting, that the 18 units that were approved at that time would revert now to this new program.
Do I have a second?
Second that.
Supervisor Kelling seconds the motion. Any further discussion?
I just have a question. Could you just go over, refresh me on the funding source for these incentives?
Yes. So the original 7.5 million. Yep, that was actually made possible by ARPA funding. It's not ARPA funding, but made possible through ARPA funding. And then there's an additional, I think, $750,000 that was provided a couple years after that. So a total of 8.25 million.
Okay, so by approving this today, this is how the structure is gonna work moving forward.
Mm-hmm.
And it's specifically funds that are already set aside and already restricted just for this use, not new money.
What, I'm sorry. Do we have a projection on when that set aside money will end, or the number? I mean, is it gonna?
Well, yeah, actually, there was a resolution that went to county board. I actually brought it with me. I can't find it, but essentially it said that the county board should reconsider funding next gen housing either by the year 2032 or when we've hit 1,000 homes, that the county board talk about it.
Okay, I do remember that. Thank you.
Yep.
Any further discussion? There being none, we'll vote. All in favor, say aye. Aye. Any opposed? Thank you. Next up is consideration of the Washington County Redevelopment Corridor South Side Concept Plan.
Okay, I have a PowerPoint for this. Thank you, Aaron. Oh, yeah, good. All right, let me just get this started. All right. So I'm going to give you so today we're going to talk about the redevelopment corridor and specifically the south site, that is the site of the Public Agency Center. But I just wanted to give you just a very quick overview of the redevelopment corridor. This is the map of the whole corridor. On the south side is the PAC site, and then at the pink, that was considered the phase one for the task force to look at. The sites in yellow is the phase two sites that the task force has not dived into yet, but that's later on in the year. We'll start talking, reconvene the task force and start looking at those sites. On the north side, we have the north side is just south of Lac La Ronde. It's the Regalware site, and that is considered the north side. But overall, this is the corridor, and today we're just focusing in on the Public Agency Center. So we have been working for a year, just over a year, on the development of numerous concept plans for the south side. Back, I think it was in October of last year, we presented 3 different plans to the executive committee. Those were very high-level concept plans. Since then, I've been working with SCH Environmental and Vanderwall and Associates, and also working very closely with the city of West Bend in finalizing those concepts. And we've come up with, different ideas and how to utilize the space. And we wanted to bring forward 2 concept plans for your consideration. So the first one is Concept Plan B. And this is 82 units. We have 44 single family. I wanted to point out that that single family is all the way, that starts on the north boundary of Highway 33. And then we have 28 cottage single family units and 10 cottage duplexes. I am going to talk a little bit about what cottage courts are a little bit further in the presentation, but essentially these are smaller homes on smaller lots that have a shared open space. Often it has a shared garden because the lots are so small. You're able to get a higher density, and then there's shared open space for those individuals and families. As far as the infrastructure costs for this concept, about 6.5 million. The cost per unit, just under 80,000. And I just want to point out, this does not include the new HHSD building or the Public Agency Center demo or the site cleanup at all. This is strictly just the design costs of infrastructure, assuming that it is a clean site. So with that, with those 82 units, we would expect an annual new tax income of over $400,000 a year, and over 20 years, the net tax revenue. So looking at all the revenue costs minus the infrastructure costs, you're looking at about just under 1.3 million with a break even of 16 years. This does retain the community garden. I'm going to move on, and then we will compare and contrast these two in different discussion points. So the next concept plan is actually very similar. It's B-1 or B1. Along the Highway 33 intersection of Indiana and 33, instead of single family, we actually have duplex units. The rest is single family. And then we have expanded the cottage court concept to include moving the community garden. So utilizing that community garden space for stormwater and additional units. So 95 units total with an infrastructure cost of just over 7 million. We're looking at about 75,000 cost per unit. Annual new tax income, 469,000 for all 95 units with 20-year net tax revenue of just under $2 million. Again, break-even point is 16 years, but we do have the additional cost of moving the community garden that is about $100,000. And yes, it is $100,000, and that's utilizing county, highway, and park staff. It's much more utilizing private developers moving that. So I wanted to spend. Oh,
That's where I got $100,000 to move a piece of dirt.
well, it's more than that. It's more than that, and I will get to that further in the PowerPoint. We can talk.
I
a little
will
bit further.
await your
Okay.
presentation.
Before we get to that, I really wanted to show you some examples of what these homes will look like. So the first is just the single family alley loaded, because all of these homes would be alley loaded. And in working with the city, we would we would extend the alleys that are already existing to the west, and we would be extending those to the east. So it aligns very well. We would have single family alley access homes. Here's what potential duplexes would look like, and those would be the ones along Highway 33 in the first concept plan. But then we get to the cottage court, and this was actually a newer concept. We just changed these plans a couple of months ago based on cottage court. There are numerous municipalities that are shifting to this concept because it does allow for much smaller homes on smaller lots, but not a condo setting. So these would be individual lots. And I wanted to provide just some examples. This was the first one that I had seen on this. It's actually in the state of Washington. These homes are about 760 to about 1,000 square feet. Still 3-bedroom, 1 bath. Now in Washington state, these are going for $640,000. But I wanted to show the concept because they're like 1.5-story homes that are all clustered. And then they have that garden common space in the middle where families can have activities, or they have a vegetable garden. It's a shared concept. And here I wanted to actually provide some interior pictures so you can see that these are beautiful homes that are being built. In Decatur, Georgia, we have the Oak Cottage Court, a very similar design. It's the 1.5 stories. These were going for $210,000 to $305,000, but the only reason these were highly subsidized and it only available to city school employees, et cetera, et cetera. But I wanted to show you the picture. They're at between 500 and 1,100 square feet. Again, 2 to 3 bedroom, 2 bath. Founders Port neighborhood in Sheboygan County. This is the development that a lot of people have been comparing next generation housing to. And they also have this a similar cottage court feel to it. Again, they have a 2-car garage attached, 1,300 to 1,500 square feet. And these are very nice homes, interior as well. We have another development, Winterberry Reserve. This is a Viridian home development that is currently taking place in Waukesha. And these homes are 1,200 square feet, 2-bed, 2-bath, listed for over $480,000. Beautiful little homes. And then I also wanted to add the Oaks of Jackson. Now, this isn't typically your typical cottage court design, but these homes are the ones that are being built in the Oaks of Jackson, and these could be very similar to what is proposed here at the Public Agency Center. 2-car garage, 1,300 square feet, 2-bedroom, 2-bath. And I think all of those have sold very quickly. Okay, so I have 3 different discussion points that I'm going to pause and allow for some discussion rather than just, cruising through this PowerPoint. The first one is the community garden. So established in 2007, there's 75 garden plots that are in production, total of 78. It's about 1 acre of land. They harvest over 8,000 pounds of food annually that has a value of over $24,000. There's been over 4,000 people that have gardened with the community garden in the last 19 years. And an estimated 750 pounds of produce is donated. So this is a very well-organized group of individuals that are very passionate and committed to the garden, not only for feeding their families, but also for helping out community organizations as well. So the discussion on moving the community garden, it equates to an additional 6 alley-style single-family homes that would have that shared open space. Those 6 additional homes would have an annual new tax income of $29,000. Again, the cost of moving the garden is estimated at $100,000. One of the potential new garden locations, if you recall back to the overall redevelopment corridor along Creek Road, we're proposing or we're looking and working with the task force about the possibility of next-gen housing in that area along that road. The garden could be proposed right behind it, just west of the array of solar panels. And so the cost, that $100,000, would be to ensure that the soil, because as you garden, it takes a lot of effort to amend the soil so it's up to speed so you can produce good produce. So we would amend the soil. We would provide fencing, because each one of those plots are currently, most of those plots are fenced individually. So fencing, moving there's a shed out there, there's water, huge, I think it's 400-gallon water containers that would be moved. We would have the cost of moving the water. Right now, there is city water that is located on Creek Road, but we would have to bring water in so they have access to a fire hydrant and then a gravel road as well as a gravel parking lot for about 10 cars. So that was the cost of $100,000 utilizing our highway staff and our park staff to do all the work. And we did get estimates of other private developers or other private landscaping firms rather, that the cost was a lot higher to do that work.
Supervisor Shadron.
I got an idea. How about we leave the garden there and put a couple houses right where that garden would go? I mean, is that county land?
It is county land.
Was there anything else to be utilized for that? It looks like it could probably fit 6 or 8 more homes in there.
Mm-hmm. Yep, and the task force is going to be looking at as part of phase 2.
Oh.
Yep.
I'm jumping ahead, aren't I?
Nope, that's okay.
I mean, that would be an idea to save that 100,000 and just put the more houses there then.
Actually, if you go back to the slide at the beginning, you don't have to do this, but at the slide at the beginning, it shows potential development right along Creek Road. We've talked to the city about developing that. There's 2 hiccups to putting it right where that little round red circle or square is. One is the city would prefer it all stay immediately on Creek Road. And 2 is that's all we've got left for expansion for our future for the highway department. So we don't want to go too far to the north, or to the north of that building or to the south of Creek Road, however you want to look at it. So really, I think, first of all, the $100,000 to move dirt, if you tour the garden, it's not dirt, that's the
Mhm.
problem.
No, it's a lot of
It's
stuff.
20 years of
Right.
labor and toil and getting all of the plans moved to the new location and prepping the site.
And the
Um,
bees,
It's, and the bees, right? So, I mean, it's an expensive endeavor, but if we're looking at it from a strictly cost benefit analysis, I think Deb's data here is the most important to look at. It really boils down to a difference of 6 units, which if you add them all up in property value is just under $2 million, which we get about $30,000 per year for. So your return is in just over 3 years, and it's perpetual.
Right.
But is it worth $100,000 to move a garden? That's the question I think the committee's gotta just decide. Is it or isn't it?
Well, I mean, if I were making the investment, yeah, it's worth it. If it's gonna pay back in 3 years and it's perpetual, it just, boy, that seems like an excessive amount of cost
It-
and now I guess I understand it a little bit better. Still seems high, but it's still a good investment. So I have no objection.
Supervisor Schwab, you wanted a comment?
Yep, couple questions. Is the existing community garden, is that property county or city?
It is county-owned property.
Okay, thank you.
Mhm.
And then in the cottage community, cottage home community, where they had the common area. So often common areas at apartment buildings and things just kind of devolve into dirt and look ugly and trashy and stuff like that. Is the proposal in these instances, or the concept in these instances where it's been done elsewhere, that they have an HOA that takes care of it, or is it typically just assumed that the people that live there are gonna wanna have
Yeah,
it look
as-
nice?
Yeah, as a common area, it would be an HOA for not the whole development. It would be an HOA just for those cottage court homes. And as you can tell from the designs, they're not many. I mean, we're talking about, 15, 20 homes here and, 28, 30 homes on the south side. And I think that they're individually owned homes rather than apartment buildings. I think that they'll take greater care in making sure that it looks good, considering that is their front yard. It's everybody's front yard.
And
No.
the Sheboygan development is probably not probably, it is a better representation than the Washington model.
Yeah.
Because it likely is going to be sod. Grass area, maybe some trees, but minimal to your point.
Thank you for that information. Then I would move that the executive committee approve concept plan B, including the relocation of the community garden. Because we have established that practice in the past and we have provided it, and no good government program ever comes to an end. I think we should relocate the community garden.
You mean
So moved.
B.1, right?
B.1.
Before you do that.
Yeah, let's
'cause there's
discuss it
something
a
that
little
might
further.
be Kind of relevant to this.
Wait a minute. Supervisor Newman wanted to make a comment, I believe.
Thank you. So my question was if we go with the route of moving the community garden, are we just moving it to another year's problem, another development's problem where we could put different homes there, but we're paying $100,000 to move the garden over there, and then when we develop that, it's like, well, we could put 6 more homes there, now we could move it somewhere else, or just, I know you don't have no maybe concept plans for that.
So Deb worked with Scott on that exact location. I think Scott and you came up with a half a dozen, maybe somewhere in that range of total different options across the county
We
or the
did.
city rather.
Yeah.
This particular one addresses the two areas of concern about the highway department expanding at some point and the possibility of development along Creek Road.
Mhm.
It kind of puts it right in between the
Yep.
two, and it's a little bit of a happy medium.
Okay, and then the second question I had is, we don't know all the details and all the information as much as you do. I always like to hear a staff recommendation. Do you have one?
I'd like to finish the presentation first because there are two more discussion points that I'd like to,
I didn't know you were done.
no, that's okay. That's why I had my hand up. Yeah, there's two more discussion points that we need to go over first.
All right.
And before I call on Supervisor Kelling again, I'll disclose that we toured the community gardens and it's easy to talk. I hate to make emotional decisions. I'm an engineer, but there's a community there. So, you know, unless they're all for moving, they put a lot of blood, sweat and tears into that property over the years. So I think before we make a final decision, we should all go look at that garden and talk to the people there because there's more than just we own the land and, you know, they're squatters because they put a lot of work into it. So that's my 2 cents for now. And I'm not saying I'm going to vote to not move it because it's a tough decision and it's our land. But it should be considered that that's a real community there. Go on.
Okay, thank you, Mr. Chairman. Just a question in regards to the cottage housing. Is this something that's gonna be able to be passed by West Bend?
Mm-hmm.
I mean, because that's ultimately, if we don't get approval on it, kind of a moot point, isn't
Yep.
it?
Yeah, so it was actually interesting because when I first looked at these cottage court designs and, you know, I had the conversation with the county executive staff first. And then my next conversation was with John Fellows from the city and providing him with some examples and an idea and what is the possibility? No promises, of course, because it's the plan commission that decides. Well, one of the things that he said was that if we're able to meet the density requirements, so we have the smaller lots, but then there's a lot of open space. When you do the calculation of the entire parcel, and you reach the existing density that they have, there actually is precedent by the Plan Commission to allow that. And then he also said that there would have to be a change, an amendment to their land division code. But it's something that we can work through. So obviously, it sounds promising, but until we go in front of the city, we won't know for sure.
Also, you have numbers for annual new tax income. That's total tax,
That's total tax.
city, school district, everything.
Yes.
So the county's portion would be a fraction of that. Okay. Okay, continue.
All right. So the next discussion point is the single family versus duplex along Highway 33. So concept plan B allows for the 11th single family. And B1 allows for the 18 duplexes. The annual new tax income from these 7 additional units is estimated at just over $34,000. And in discussions that I've had with the city, I don't really think that there's a real position here either way. I think it's more of a what makes sense in the neighborhood along 33 and there's single families right now along 33, but there are also duplexes. So
I believe the Habitat home that was built
mhm,
just east
that's a duplex.
around
There's a
or
lot of,
west of,
lot
yeah.
of duplexes there that are not necessarily side by side duplexes either.
Like upper and
Upper
lower.
lowers,
Yeah.
that whole stretch. there's-
Yeah. These would be like side by side.
But I mean, it's common in that area.
Yep.
I think, excuse me.
Go ahead.
In both instances, though, I talked to some of the people in the neighborhood. And they are very interested in keeping those larger single-family home lots to the east of, you know, the west neighborhood is, they want it to stay consistent. I think
Single
that
family.
was the thing I heard again and again. We want this to stay consistent.
And we heard that at the open house.
Yes.
Same thing.
Yep.
Which is why that we give you both options because as Doug was just saying, the reality is the house is on 33. It's many of them. It's not like there's 2. It's not like the Habitat one is the only one. There's there's a lot if you knock doors over there.
Mhm.
So it makes sense. If you're gonna do it, this is a spot to do it. But single family is,
Yeah,
it's
I mean,
nice, but
it's preferable for the single family, but I think you're kind of creating a buffer there. So if you go with duplex on 33, I think you're okay. Because you're not interfering with the old neighborhood. You're building something that's consistent with it, with the new neighborhood. And then on the other
I
side,
think we could say it
Yep.
both ways, right?
Yeah, yep. And the other thing I want to point out too is that to envision this, the regardless of whether it's single family or duplexes along 33, these would be, you know, alley loaded lowers. So because there's a grade difference between, you know, 33 and that alley. So you would drive the alley and you would go into the garage and then the home would be above it. So when you're driving on 33, you are seeing their front doors.
So there's gonna be grading down the hill.
It's down.
on
when you
where the
drive in.
PAC
Yep.
and then.
Yep.
Okay. Any further questions? Is that the end of your,
Nope, I have one more.
okay,
Okay. Okay, so the next one is really, should the county develop this or should we really be partnering and hiring a developer, a private developer? So I just have some points here. There's a lot of really good points into hiring a developer. The city has a long practice of working directly with private developers versus government when they're utilizing tax incremental financing. In this instance, the possibility of utilizing a residential TID. So it would keep that practice consistent. Also, just the expertise and the resources that are needed to successfully implement this county vision. This is the first of potentially many developments within our county property that we want to put back on the tax rolls. That's going to take a lot of resources, and working with a developer they would be able to provide those resources to make sure that we implement our vision correctly. But then they would also work closely with county staff and SCH and Vanderwall when we move through the process with the city approval. So it's really, although we'd be, you know, hiring them, we'd have a contract with them, it really would be a partnership because we're going to make sure that our vision that we are creating today is implemented the way we see. The downside, though, there is a little bit of a downside, is that the developer will want a cut. They will certainly have a profit that they will need to hit, and that would up the sale price a little bit than what we could sell them for.
Supervisor Shadron.
My only question then is, are they still sellable then? Because now you're talking a higher price point, right?
I think that they will be, but I think that it all depends on I would say yes, they will be, because we have developers that are building and selling and making a profit on next gen housing now. So I would say yes, but we also intend to provide some discounts on the land since the county is not out to make a profit on the land. So all of those numbers and how that works out is really a conversation for another day. But I would say yes.
Okay.
Supervisor Shadron, or Schwab, excuse me.
Mr. Chairman, that seems to me we have three issues on the table and we should focus on them one at a time. One of the issues being community garden, the second issue being the plot, which one we like, and the third being development management. So I will defer you as to which one you would like to address first, but I think for the purpose of getting through them quickly and in orderly, we should only talk about one at a time.
Okay. Well, let's take this last part. Do we want to develop it or do we want a developer to develop it? For executive?
Thank you, Mr. Chairman. So we've worked with the Village of Jackson and played a kind of the role of pseudo developer a little bit with them on their project because of the unique circumstances of the Oaks. And we learned a lot.
Mhm.
I think the biggest thing we learned is having somebody who does this, the private sector is very much welcome in this conversation. We're in the process, as some of you know, of getting proposals for our HHS building with the private sector. I would envision doing a very similar RFI type process. First seeing if, are you even interested, development world, in doing it this way? Based on my presentations on next gen housing with some of them, I'm highly confident we're gonna get yeses, but you know, maybe something else happens. I think it adds another layer of this being white glove, let the private sector do what the private sector does. But allows us also to guide it along the way at the same time. So I highly recommend that we at least give it a shot to work with developer. And if for some reason it doesn't work, we can always come back here and reconsider.
I'm a firm believer of letting the experts do what the experts do. So I'm in agreement with that. Supervisor Kelling?
Yeah, I also, I helped my brother, we developed a few houses and I've got at least a little bit of experience with it. And yeah, it's not that easy. And it's not what we do. I mean, just to put a point on it, it's just not what we do. I think even with it having a little bit more costs, it also reduces our risks. And it certainly will probably help our timeline. Now, those aren't actuals that you will probably see, but I think you can kind of extrapolate that that's going to be the case. So I think that that's probably a good idea.
Supervisor Schwab?
I think as we do more of these, there may come a time when staff gets more acclimated with how the private sector does things where it might be possible to act as our own developer. But for this instance, as we're starting out, it's probably better to go the private sector.
Do we have
I agree.
consensus?
Consensus.
Okay, that decision's made. And to decide one concept or the other, I think we have to decide on the community garden, so. Comments?
If I might, Mr. Chairman. I also toured along with Mike and the chairman that property. And again, as I know $100,000 is a lot of money. But I think we've got to be very careful and sensitive about if that move is what we decide, that we do it very appropriately. It will likely take 2 to 3 years to fully get everything moved. I mean, if you're a gardener, think annuals and perennials and seasons. That's going to be a project. So I think we just need to put a little extra elbow grease and effort into making sure that if we're gonna do it, let's do it right and make the next spot even a little bit better than the current one. And work very, very closely with the gardeners to make it as seamless as possible. Cause as the chairman said, I mean, they really have put a lot of really good effort that gives back to the community in a multitude of ways.
Is it inappropriate for me to invite people to come and visit? At this time, can I do that? Yeah. So my name is Mary Riley Kliss, and I am the instigator and the developer.
And I'll point out, we don't normally let the public talk,
That's why I
but
asked this, so-
we'll give you a few minutes.
30 seconds. My name is Mary Riley Kliss, and I am the developer and the coordinator of the community garden. This is our 19th year. Next year will be number 20. And we had a really nice tour on a real warm afternoon a couple of weeks ago. I would like to invite you and anybody else on the board or in the community. I would be happy to arrange tours for you. It's one thing for you to just kind of stroll through by yourselves, but it's something else to have someone there with you to talk about the infrastructure and all of our subcommittees and all of the other kinds of things. So happy to do that. I don't know how to go about setting that up, but they all have my contact information, and I can do individuals or I can do group tours, whatever you would prefer. Okay. All right. Thank you very much. Thank you. Thank you.
So if we decide to move them, what's the ramifications for them? Would it be acceptable to them, or is it gonna cause a big ruckus.
Well, I hung around a little after, and Mary and I talked while we were dripping in sweat, because it was quite warm
It
that
was
day. But I think the long and short of it is nobody wants to move something that they've put that much time and energy into. I don't think there's any doubt about that. But when you're talking about dollars and cents like this, I think that's why we have to be very, very cognizant. We have to plan very closely with Mary and her team about if this is gonna move, how it's gonna move, lay out a nice plan, you know, put a little extra effort, maybe put in some things that don't exist on the existing piece of property. And we can bring all that back here or to the Public Works Committee or whomever you'd like to make sure that we're I-dotting and T-crossing. We get an actual budget and an actual timeline, all of those things. But again, I think it really just comes down to Supervisor Schwab was, I think, inferring at least earlier. I mean, it's a business decision.
Excuse me for a minute though, but the plot we're talking about potentially moving to, is there more land there? Because they're landlocked now
Mhm.
and they have a waiting list. So if there's an opportunity to give them a little bit more land,
Yes,
that would
absolutely.
probably mean something to them too.
And it would be actually helpful if the decision of the committee is, let's proceed as if we're going to go with B1, as was intimated earlier, that you give that additional direction to staff to then come back to you with a plan that gives you options like that. For example, Deb alluded to, like water's a problem. They've got some solutions, but there could be better solutions. Tending to the land itself, getting it prepped to move, making it larger. I think there's a number of things that if we actually work closely with the gardeners, we could probably come up with a plan that really is nice in the long term, but it's gonna take a couple of years, at least, maybe 3 even, to get everything moved and done in the right way.
I'm not insensitive to the desires of the existing gardeners. And I think we should take their hard work and effort into account. But as we do that, we also have to keep in mind, we have to take into account the other 136,000 members of Washington County, not just the 80 or whatever that are using that county property now. That being said, is it your opinion, Deb, that if we do this and if it takes a couple of years, that the development could start on the north side and work south in a way that would accommodate a more reluctant approach to moving the gardens?
Well, that is an interesting question because we also have the timeline on the Public Agency Center as well. So,
And that was what I was alluding to. And I said, if you give us some direction to start planning, staff will have the directive to actually develop a plan and a Gantt chart and some timelines and acreage and so forth. That would be very helpful.
Who wants to go first?
You can go.
So I know there's a lot of passion in that garden and I think I can get behind the motion that was made to move the garden. If we can prepare that, by the time we get to that development, we're gonna have plenty of time to build something, and I'm gonna say bigger and better. That's, you know, in a new location. I can get behind that, but again, I'm not insensitive to it as well, because I wasn't too sure on it at first, but I think it makes sense, business sense. You know.
And I'd encourage you all to take that tour. Those cucumbers are fantastic.
Thank you, Mr. Chairman. Also, I think if we are being good stewards of the taxpayers' money, then it would seem that moving the garden would be fiscally prudent. But also, to the people who operate the garden, if there can be some sharing of the ROI. Okay, so perhaps a little bit more space, and of course, certainly trying to make sure that they're made whole and give them an opportunity to have some voice in how things are moved and done. That with the idea that in the end, it will be moved, but if there's something we can do to make it more palatable, something,
Mhm.
to make it a little bit easier, I think that that would be prudent considering the return on our investment.
Well said. Anyone else wish to speak?
I concur, so.
So I guess for that part, we need a motion to proceed.
Said the motion already, right?
Yeah.
So I'll second that motion.
Thank you.
Okay, there you go.
And that included, the concept B1, I think. Um, do we have to incorporate the last two potentials?
I think your consensus is building, we understand it clearly, I think.
I think the only thing is the along Highway 33, single family or duplex.
Oh, yeah.
Yeah, and I think you're better off with the duplex. I think you are removed from the single family units of the existing neighborhood. And I think it also gives us a greater ROI. So I believe that that would be the prudent way to go.
I tend to agree with that.
I would accept counsel on how to proceed in making the duplex as part of that motion.
It's drawn into B1, which is what you recommended, so
Perfect.
it would have been a change the other way.
Yeah.
Thank you.
Okay, any further comments then? So we have a motion and a second. The second was by didn't he revise it to restate it?
No.
Yeah, that was his first motion. Yeah, Newman seconded. We have a motion in a second. Council?
Technical difficulties.
The first motion was made to move the beauty
And to do
Do
the
B1.
concept plan B. And it was all inclusive.
Newman. Yes.
Yeah, it was just that there was discussion between.
And it was understood that staff will explore
Mhm.
how to
Both the
make the
private
move.
developer and the
Move at the garden
Right,
planning for moving.
planning. Yep.
okay, we all on the same page?
Believe so.
All in favor, say aye.
Aye.
Aye. Any opposed? Okay,
Thank you.
next item on the agenda. Oh, is tax deeds. And Clerk Reichert, spoke to me today that, she's not ready with this item. So I would entertain a motion to postpone it to next month.
Motion.
Motion by Supervisor Kelling, second by Supervisor Shadron. Any discussion? All in favor, say aye.
Aye.
Aye. Any opposed? Okay,
Take a 5 minute.
we're quickly gonna do a little talk on the sewer pack business by Attorney Stern, and then we'll take a short recess.
No, sure.
Okay,
Oh,
good
wait a
evening,
minute,
everybody.
did we
Yep.
vote on the tax deed postponement?
Yes.
Yes, we did.
Okay, good, thank you.
I'll just give you a quick update on some rather, I think, concerning information about Sewer Pack and their recent attempt, quite frankly, to stick it to the taxpayer of Washington County that Scott Schmidt caught and we were able to hopefully put a stop to. What ended up happening unfolded over the course of the past few days, but in order for me to explain what that is, I'm going to give you just a little background first. You may or may not be familiar with something called a sewer pack tip, TIP. which is a transportation improvement program. That is a planning document that's prepared by Sewer PAC. And it lists all the federally funded, regionally significant transportation projects that affect the region, the 7-county region, over a 4-year period. The current TIP is 2025 to 2028. There are about 513 projects in that TIP, and these projects total about $3.5 billion total. And Washington County has some projects within that TIP. Now, these TIPs, as they're called, can be amended. These TIPs can be amended weekly, monthly, however often Sewer PAC feels that they need to amend something to account for perhaps some change in the planning or the region or something like that. When they want to amend a TIP, there's a way that they do that. And it's interesting. It's on their website. They have something called the Community Engagement Plan when they want to amend a TIP. And it's supposed to guide commissioners, agency staff, advisory committee members, and so on, to engage constituents in the process, to enrich regional planning. That's what they say, community engagement. Their goals in community engagement are as follows. They want to provide early and continuous public notification about changes to the TIP. That's goal number 1. They also want to collect meaningful information to assist in the process. That's their second goal. And their third goal in their community engagement is to incorporate as much community input as possible into regional planning. That said, we came across, really accidentally, quite frankly, an attempt by Sewer PAC to amend this TIP to remove 2 Washington County projects, highway projects from the TIP. One that affects County Highway D, which is already finished, by the way, and another one that is to affect, I believe it's Highway 175. I have the notes here. So Landon Road, I want to say that is. Let me be exact about that, though, because I don't want to.
Highway Y from 175 to Q.
Right. I have the actual. Yeah, I had it and I put it to the back here, but yes, right. It was pavement replacement on County Highway D and then Landon Road repavement replacement on County Highway Q, the State Highway 175. We were not notified of this. We weren't given any sort of advanced warning of this. They put this out to public comment, and by the time we found out about it, public comment was due to close August 17th. We've had literally just days ahead of that deadline. Wednesday night, I was sitting at my seat. I hate to confess it to you, but as debate was going on other issues, studying this and working on a response. So multitasking, I like to call that. But in any event, we did complete a public comment. I did some legal research on the matter and believe that Sewer PAC was acting outside its legal authority to do this. We prepared a public comment that county board chair signed and the county executive signed, and that was filed with Sewer PAC as part of their public comment process. In addition to that, the county executive drafted a very strongly worded letter. Our public comment and the letter that the county executive drafted are going to be sent like wildfire across the state to both our state and federal legislative representatives, to the governor's office, and anybody else will receive it and will take a look at it because, quite frankly, it's outrageous. And with any, with any doing on our part, we're going to hopefully put a stop to this particular amendment. Again, one of the projects that's already done and paid for. They think they're going to claw back the money that's already spent. That's not possible. The other project has already been designed and is about to begin work. So this is, in my opinion, retaliation and nothing more than that for the county board's very lawful decision to withdraw from Sewer PAC. In November of last year, the board passed a resolution. We did everything we were supposed to do. We did it correctly. And Sewer PAC has done nothing since that time but find ways to withhold data from the county, to take us off their websites, to essentially act like Washington County and its taxpayers, more importantly, don't matter and don't exist. And this is something we're going to continue to fight and rally against. The county executive's taken a very strong stance. County board chair's taken a very strong stance. I know you all will as well. We will continue to fight this fight, but I wanted to bring this to your attention this evening. I know we've been here a while tonight. There's other important matters to tend to, but I wanted you to know about this while we were all together. So, and I thank you for your time this evening.
Thank you. Any questions?
Just a comment.
Yeah.
Thank you, Brad, for bringing that to our attention. And I think it's important for taxpayers to know at home that a large portion of SERPAC, the monies that they receive come from the federal government and from the state government. And so even though Washington County isn't contributing necessarily to them, which is only about, I think it was under $200,000, it's actually taxes dollars that are coming from your pocket, Washington County, through the state and the federal, and we are getting zero back for it. And not only are we getting zero back for it, we are most definitely getting retaliation and just some underhanded garbage out of these bureaucrats. And I think every taxpayer in this county should know about this.
These projects were approved. They're federally, state, and locally funded projects. They're on the books already, one done, one about to begin. And these are the taxpayers of Washington County who drive on these roads, people across the state, of course, and that's who gets penalized by that kind of thing.
And these are your tax dollars, people, that they're trying to claw back or withhold just because they didn't like the decision that we made at the county board. And to me, that's outrageous.
Yes.
Their annual budget is in the neighborhood of $8 million. So our 200,000 is a very small part of their total income. It's largely federal and state money. So, thank you.
Thank you very much.
Let's take a short recess. Maybe 5 minutes.
Okay, use it wisely.
You on our
Come on.
recess?